All right, good morning, everybody. How's everybody doing on this fantastic day? We're just going to give a couple more people time to run in here. All right, that looks good. All right, good morning, everybody. How's everybody doing? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you become a better trader. So last night we were looking for Bitcoin to do a little pump. I wasn't expecting a massive pump like we got, but I was looking for Bitcoin to trade higher. The important thing was Saturday's upload. I basically discussed and laid out the entire plan for this week. With everything going on in the macro, like the current world events with Russia, Canada, other places, and other things, you would think that that wouldn't support such a pump. Two countries getting ready to go to war. Where does the U.S. stand in that? Canada's essentially turned into Nazi Germany. I mean, you would think that things would not be wanting to pump as much as they are. But that's just the thing. Volatility is here, and it's probably here to stay for a couple years. So buckle up, because it's going to be a bumpy ride. It's a fantastic ride. Once you understand what you're looking at, once you understand that you follow price and not the other way around, you don't chase it and you don't expect it to do certain things. You just basically let price form to your narrative. Let the setups come to you. So what we were looking for and waiting on mostly was to see if Bitcoin could indeed close last week, which was Sunday, above this level of resistance. Because the previous week we were looking for that to happen. Once that happened, we had a bullish continuation push up into almost the yearly opening range. Now, on the Coinbase data feed, you did not test your yearly open. You might have on other exchanges. All right, so it's not like a set in stone level that's going to be the same price across all exchanges. It will not. But I was looking for that to at least be tested. Since we didn't test that and we rolled over, it could still yet be a bullish target. That was the plan coming into this week. We did indeed close above. We closed right on the level, but it was there. And if also you remember, I had a daily support zone that was just under the weekly. The initial, or the support zone itself was $41,404. The close of this daily candle, however, the open of that candle is what we call a Heath level. And if price is trading above that current level, that is considered a demand zone. If price is trading below a level, then that is supply. So you can see here that you came into daily demand and tested it absolutely flawlessly, and then printed a bullish engulfing candle. Now, remember, outside candles and engulfing candles work better when they are in the direction of the near-term trend. This near-term trend is up. All right, the longer term, or the macro, is down, but you have broken out of your descending trend line. So you are currently trying to make a higher high and higher low sequence of price, and you do have the higher high. Remember, we were looking for a higher low. Now we currently have one, and we are seeing a pump. So moving into intraday time frame, we'll get into this a little bit here. You can see this is the demand test right there. Now that happened on the day that we got the weekly close. So whenever you do get a weekly close above a level, and then an hour or so later, well, in this case, an hour, 1 hour later, you trade lower than the level you wanted to see price close above. That's just games that price plays. Then you can see what happens, right? Yesterday, you got a nice pop out of the area, trading away from the level that we were watching. So what happens here is you set in a support zone once you push up into this, right in there, this section of price. Here's your push out of the level. This can be considered another test of your weekly support zone. And then you get this bullish candle here. Sideways price action, but this is a breakout above resistance. Now, the only resistance you did not break out above was this one. This is what kept price down. There's your first test, second test. Basically, price falls away. So this is going to make retail get short on this move lower. They're going to say, like, this is just a small bounce, time to get short and rolled over. We were looking for long positions, not short positions, long positions, because we stick with the overall narrative of the market. And the market is where you want to be listening to. So here on this candle, you can see that you do have an absolute phenomenal support test. So once you got this support test, you move higher and you trade up and also close above this resistance level. So this push lower was a chance to get long at another or your next area of support because price is creeping up that ladder. So when it starts to creep up that ladder, we look for those support zones. And right here is that support zone at which that's where you want to get long, especially if you close an hourly above it. So yesterday we test down into it. I did post it, but I guess everybody was busy on not Thanksgiving, damn it, on Valentine's Day. So nobody really reacted to it, but I did. I reacted to it. I got long right there. My stop was just below this wick low, and then boom. Absolute perfection. It's a thing of beauty. That was the target right here. This wick high, that was the target. That's where everybody in this range is short. Remember, I always tell you guys that when price finds specific levels, you will bounce back and forth and create an intraday range that can last for multiple days. And basically, price is looking for liquidity. It's trading up, then it trades down, then it trades back up, and it trades down. And it's basically testing for liquidity. And when it finds the liquidity that it's specifically looking for, or when you have an overwhelming amount of specific volume coming in, then you will get these kind of price reactions. Now that retail has stopped out, let's go out here to the daily time frame so you can see what's going on now. We're going to go ahead and delete all those lines because those lines are specifically just to show you the trade that I took last night and why I took it. So now you are trading into a daily supply zone and you have daily resistance here. Current events going on would not support this move, but nonetheless, you're getting it. So you can't just simply ignore it or say that it shouldn't be so. Am I going to try to short this right now? No, because it's showing strength. You never ever try to short something that is showing this kind of strength. That is very strong. Big pump, sideways, continuation. That is bullish. That is not bearish. All right, a pump into a specific resistance, then you roll over, that's bearish. This is not. When you pump, trade sideways, and extend that rally, then essentially you are bullish. You're not bearish. Let me go over here to Dogecoin, as this is an absolute perfect example of what shorting a pump looks like. Go over here to the daily time frame. You can see big, strong, huge pump, right? Massive pump. Well, that thing was sold into. Not even 2 days later, you're taking out the low of your pump candle. Same scenario here. Strong pump. Just a few days ago, we were watching this one. In downtrends, pops in price usually get sold into. So where Bitcoin traded sideways, on this asset, you can see a support was made. So if this was going to be continuing bullish, you would see the sideways price action, and then you'd want to see a break of resistance. Instead, you set in a support zone, and then you break that support zone, and then you trade sideways for another 2 hours, and then you break it again. That is not bullish. That's when you want to look for your shorting opportunities. Now, since Bitcoin has found support and is pumping, and so is a lot of other risk-on assets like the Aussie yen, Euro USD, Pound yen, all those things are pumping as well. S&P 500, your NASDAQs, I mean, literally everything bounced from this stuff that when it happened last night. It's not good news. Nothing that's going on in the world is good news. We should not be seeing a pump. So what I'm going to do from here on out is obviously I'm going to be watching today's close. If we close above daily res or above daily supply, then I'll stay long. I'll keep that long position running. If we stall out here at the close today, if we are below the supply zone, I will treat this as a shortable event, looking for price to roll over because the world sucks right now, right? The world is in absolute turmoil. Thank you, Joe Biden, for doing such a marvelous job. Here we go over here to the S&P 500. This is the SPX 500 USD. It's just a asset that was created for European traders to trade the SPX. You can see that you're getting that pump. There is your daily candle. You are well above yesterday's high. Here was the bullish target when I went to bed last night. Right there. That's your resistance level. That held price there, held price there. So essentially retail sees this as a double top, and then you get that bearish reaction at 1 o'clock. Then price trades right back up into the area where it should not have. There is your hourly supply zone. If this was going to continue lower, you would immediately want to see that happen on a test of this, not slowly keep ascending upwards. Now, you did put in what looks like a little bull trap here, a bear trap. No, it was a bull trap, apologies. And then you even got almost an outside candle. You did not take out the high of your previous candle, so this is not an outside candle signal. And then you never did come back in to test supply anyways. So here was the zone where it caught support. And Bitcoin had already pumped at this point. All right. This just happened during the London session open, 3 a.m., 2 a.m., 3 a.m. That's your London session open. You can see here that the pump occurred during that. Bitcoin's pump happened during the Asian session. So if Bitcoin pumping during the Asian session, this thing was not. That was another indicator to tell you do not look to short the S&P 500. Simply because Bitcoin's pumping and a couple of other risk assets are pumping as well. And I did post the Aussie Yen chart on Twitter yesterday or last night. You did have an hourly resistance here. This was my bullish target right there. You can see that we have hit that and we are coming off. This could be the first signs that this pump that we're looking at is more than likely going to be shorted. So basically what you got to see now, this is going to be the section of price that has to stay under. So if price goes back up and tests 82,708 and rejects, I might be looking to get short there. If that also occurs, I might be looking to take off that long position. What is going on? All right. All right, sorry about the distraction. So that's what we're looking at, all right? We're going to see if this ends up holding as resistance. If it does, then we're probably going to be looking to short this move. Now that you are above all of the liquidity on Aussie Yen, this is your liquidity I am speaking of. That is the highest candle. That is also resistance. This is a close above it. You shouldn't be seeing this much of a pullback on it. You are testing the midpoint of this breakout candle. So a pullback is what you would be looking for. So we'll watch 82,651. The New York session has not got started yet. So please do not short this just yet. And do not short it until you have an obvious rejection of resistance. Then you can look for your entry. But I'm just saying that I don't trust the pump. If you can't tell, I just do not trust what we're seeing happening on all risk on assets. It does not support the pump. So I'm looking at this pump as one thing and one thing only, and that is a liquidity event. This move was simply to stop out overzealous retail. Now, if we keep trading higher, if we close above 82,651 again, and we continue to trade higher, then we will wait until tomorrow or the next day. It's only Tuesday. There is plenty of time to get into any short positions, but you want to make sure that you get into a short position that has a higher probability of working out. You don't want to short into strength. And right now, everything is strong. Pound yen did not hit targets. Scroll over here. You can see here, pound yen was one of the assets that has not hit targets yet. So you could see a slight more pump come out of this. All right. Once this swing high gets taken out, then I want to see rejection. So I probably won't be watching Aussie yen for the short. I will more than likely be watching this one. This one also, though, if you look at it on the daily, it does not look weak. It does not look weak at all. This was a swing high stab, so you did smoke the liquidity there, and you did get 2 bearish days. But this day right here closed way above any resistance or support level. So down here you have daily support. It was a test of it, but you closed well above it. So here, this candle yesterday trades down into a demand zone right there, and you're seeing a bit of a bullish pop. So that will more than likely trade on up into those targets. Didn't quite trade into it, but it was close enough. So it may go ahead and trade into yesterday's high. Most other assets have already taken out yesterday's high. And on Euro USD, you have not taken out yesterday's high either. So be careful shorting into strength. Wait for the New York session to open. Make sure that this bullish price action isn't going to continue before you get short. Look at Bitcoin. Bitcoin is ripping. So if you got short there, you have already gotten stopped out. There's no point in trying to short price when it is into bullish continuation, right? We'll wait. Need a rejection, and we need a rejection below one of these 2 daily levels. This higher one is daily res. That is your daily supply zone. A stab above it, as long as it closes back under it, then we'll look for short side entries. If this thing just keeps trucking, then we're going to be looking for the yearly open test. And then let's go ahead and get that yearly open for you, so that way you know what I'm talking about. Boom. That is your yearly open. Back out to the daily. You can see that you fell short of that yearly open test right there. So if we close above this resistance today, 2 days close will be important, then this will be my target. If we fail to close above this today, then I will more than likely be looking for a short side entries. All right. Let's see what everybody is saying. Good morning, good mornings. Lots and lots of good mornings. What a pump. It was a very nice pump, Lacey. Or Lachey. Lachey. Not quite sure how to say that. Held strong on the long from last week. Fully positioned. Nice work. Pump the like button just like BTC today. Thank you, Danny. That would be fantastic if you guys wouldn't mind. Agreed. Morning from England. Good morning, Shane. Thanks for all the content. Please check SPY and Amazon. All right, let's go look at SPY. So, I won't be looking for short entries first thing in the morning. Obviously, you can't see what's going on SPY, but since we looked at the SPX, we know that price is up into here. Right into that zone. Oh, get up there. So we know that price is up around there because you have a strong bullish daily candle right now on the SPX. You can't see it on this because this thing closes at 4 o'clock every day, and then price does still trade though. So that's why you have gaps. This is another reason why I tell people to not really pay attention to gaps on other charts, because gaps don't have to fill, and 90% of them have already been filled from just price action the night that happened during that night. So yes, this is definitely going to open with a gap, and you could definitely see a pullback down to this high, but I just don't know if that's going to be something to trade, simply because it is very strong. Let's just go back to the SPX because it's impossible to see what's going on. I want the CFD 40 there it is. See, this is what's happened overnight because the futures market still trades. So when anybody tells me that there's a gap on CME, that doesn't necessarily matter. I don't care if there's a near-term gap under price. Just because that gap is there, it does not mean that price is going to trade down there to fill it. Do gaps get filled? Yeah, more than often they do. Right? They do often get filled. But there are a lot of assets, Amazon being one of them, and Bitcoin still on the CMEs. There are gaps under price that haven't been filled. You've got gaps all the way down into 19K on the CME chart. AMZN, Amazon has gaps all the way down in the $200 regions. So gaps do not ever have to fill. All right, they just do not have to. If you think they do, don't just stop trading like that. There's a gap right here that is clearly unfilled, and at $1,000, it's unlikely that it ever does get filled. All right. But right now, Amazon will probably more than likely have a strong bullish candle. You did close bullish yesterday. So, yeah, I mean, it was getting sold off. Most tech did get sold off. Tech will get sold off in a risk-off environment. And it looks like we are seeing that capital rotation out of your risk-on assets into your value stocks and stuff like that. So, yeah, you will see a pullback. Does the pullback continue? We'll see. Let's go look at the weekly time frame and see if there's an obvious play. There is not. You do have weekly resistance right there, but remember, you can close a daily or two above that region and then retreat as it relies on the weekly close. Friday at 4 o'clock will show you where that is. 32.4276. Now, I just don't see me wanting to take this short if Amazon trades all the way back up there, because it'll look to be more bullish than bearish, because you already traded up in there and rejected. Last week you traded up to this week's open, and that was the area to get short. There, you can see it is a beautiful test. If you go back into the daily time frame, you'll see that was the opportunity to get short. That occurred yesterday as well, but this was the day that it happened on. This is your weekly. This is the open. That's your retest of it, and then boom, you moved lower than this right here. So yeah, I don't know if even, yeah, it's not even gonna show me. Why is this 3 o'clock? That was the close. That's strange. So it's not showing me any pre-market stuff. So I can't tell you where price is on Amazon just yet. You're going to have to wait until pre-market data starts showing up. But with the S&P 500 taking out yesterday's high, you could bet that Amazon more than likely will be taking out yesterday's high as well on the open. So I'm looking for price to be trading above that weekly resistance. So be careful on it. SLP and XRP. Let's go look at Smooth Love Potion. It's still holding that pop. It is absolutely still holding the pop. Alex Rebuild says PM pre-market data real time requires a subscription, and there's probably a setting somewhere, I'm sure. Thank you, Alex. Yeah, I mean, I got pre-market data on Thinkorswim, so I mean, I ain't really worried about it. I'm pretty sure it's going to be gapping up above yesterday's high like the SPX, but thank you, I didn't know that. So here is the Smooth Love Potion. It pumped, and you are maintaining support. All right, now this is the thing. It does look like a bull flag, so if you get a daily close below this 0.02716 level, then you can look for lower prices. If you're going to continue the pump, then I would want to see this area hold a support. So like if you take out that swing low, then you definitely want to see that hold a support. What appears to be happening right now is you set in a support zone. Then you went up and you tested daily resistance. And that daily resistance held. So price pulls back. This is range-bound price action. right? Then you go back in for another support test. It holds, and you go up and you test a new resistance, which is this area here. That's how price starts to wedge up. Because these levels that I show you guys to watch, these are the levels that real market participants are watching, right? Not anything else you've learned. Throw it all away, all of it. Here it is. Sets in resistance, comes down, sets in support. That's your zone. Another test of resistance, retraces. Then your next day opens. You get a small pump. Then you come down to test support, and it holds. New day opens, and you just trade up into your new resistance, and it's holding. So these are your levels that you need to get above for bullish continuation. And like I said, this is your support zone now. I don't know this asset, right? It doesn't look very good. Doesn't look very good. This pump, although it was a couple 100%, is tiny compared to some of the other pumps that it's had. But this pump also could be bigger than these. Let's turn on log. Okay, so yeah, this pump is way bigger than those pumps. Gotcha. So yeah, I mean, it could hold, but it's not like an asset that looks like, could it be pumping because of Valentine's Day? That's another question you got to ask. Was this move a selling opportunity? Was this pump because of Valentine's Day? I mean, something called smooth love potion. Maybe your run is done on this. So watch resistance. If you take out support, then I would probably be shorting any resistance test, right? Any resistance test, I would look to short it. This is definitely does not have futures, I don't think. I don't remember seeing this on my futures on KuCoin, so chances are it's just on the regular margin side of the platform. Let me see here. I just want to see if I got it over here, because I have all of the futures contracts that are tradable on KuCoin right here. These are all of them. And you can see SLP is not among them. So this is just on the margin side. And then XRP. Everything's going to be pumping with Bitcoin, right? Everything. Mostly everything also broke out of that descending trend line. So we're not looking for new all-time highs on anything. Can some things hit new all-time highs? Absolutely they can. Right? I mean, you know how crypto works. Look at this nasty crap. Let me just see how big that downside spike was. It's just insane. A 53% drop in the span of one freaking day. Damn it, man. But yeah, you did take out your downside. This is the same thing that happened to Bitcoin. Bitcoin had a nice breakout. Bitcoin found support, and Bitcoin's trading away from it. Same exact thing is going on XRP right now. Here is your line in the sand. For bullish continuation, you need to close above 83,404. That is your daily supply zone. Daily resistance is lower. All right, daily resistance is here at 82,242. So a close above that could be indicative of bullish continuation, and that bullish continuation would be 87,822. So it would be a tradable event. What you need to see is a close above resistance and then a pullback to test for it to see if it holds a support, and that could be tomorrow if you do indeed close above today. But if what's about to happen is going to happen, what I'm assuming is going to happen, then a lot of these things are going to close under resistance. All right. But we'll see. I could be wrong. I'm long right now. So I'm still long that position. That position was up almost 20-something%. So it's doing fantastic. There's no point in closing it out. Not until I see massive rejection. Hopefully that helps. Was buying a couple months. All right. MFER says Slothback. I do not know if that's a ticker symbol. MFER. It's on Sushi Swap. I don't know if that's what he wants. That's the only thing I get with it. I'm going to feel like an idiot. No, definitely not trading that. A bit busy. Buried my man Valentine's Day. That's terrible, old rope 63, my friend. Sorry to hear that. My apologies, sorry, man. Take the day off, mourn, all that stuff. You're a trooper to be here on a live stream after that. So my sympathies for you, my friend. Mauricio says, hi, Heath, would you look at USD BRL daily? Yeah, let's go look at it. USD BRL, Brazilian Real. You didn't say which exchange. There's only two. I'll look at it on the IDC. Let's get rid of all this stuff because this stuff isn't going to match up. So it's in a very, very long-term range. It looks like Asian stock markets almost, don't it? Long-term range. And so basically what I want to do is I want to see where price is trading with, everything. And you can see that it is under your 50 on the daily. So it is an obvious downtrend. Here's your weekly. So on your weekly, you've been trading lower for multiple weeks. You are into weekly support, so I would probably suggest that you might see a bounce. Excuse me. You did kind of get that bounce last week. You can see that you traded down to it a little lower, and then you did get a bounce. But you're right back to it almost. So for 2 days, you got that bounce, and then boom. So 51 or 5 spot 1908. That's your weekly support zone. Daily support is here because it just made a new one. You're making lower highs and lower lows. I wouldn't necessarily be looking for a short side entry here. And as far as looking for, a long setup here, you're fighting against the trend. You're trying to pick a trend reversal. So you might get stopped out a few times before you actually get it. A safe way would be to wait for the daily downtrend to obviously be smoked, since it's such a steep downtrend. A sideways price action could cause a breakout, right? So I'm not saying like this is the line in the sand and then become all uber bullish if that gets broken. No, because currency pairs trade a lot different than stocks and stuff. You could see a breakout though if it does get above that, but that's where I would wait before I'd even start looking for longs. Another thing you could do is you could wait until your RSI gets back above the 50, because at that point you'll be also back above your 21 exponential moving average. Then you can look for support tests and longs. That doesn't always work, because yesterday we were watching Euro Aussie, or I was looking at Euro Aussie. It was the only asset that I seen that was even tradable yesterday for everybody. And you can see here what happened yesterday. Boom, this. So when I looked at price action, when I woke up, come to the office, look for setups, this was trading inside of this range, this candle, this red candle. We were trading like in the middle of this range. So what I was watching for was a support test, and that to hold for bullish pump. The reason is because you can see here that we are still above the 50 and you're still above the 21. You are not any longer, right? So could this be a fake out move to the downside? This is going to be a bear trap. Only if you take out the high of yesterday's candle can you look for bullish entries. And you have pretty good amount of room back up to resistance if it does do that. If it does take out yesterday's high. And if that occurs, then you will have a bear trap on your hands. And we were looking for longs yesterday. We were just a day early. I did not take the position because when we got close to it, where I wanted to see my support test was this hourly candle right there. For me to get long, I would need to see price test it. Boom. And then hold. It did not hold. Not even close. It ripped right back down through it. Once this candle occurred, the setup was over. We squashed the setup. Yesterday was a very boring day for me. I did not take any trades across any markets until last night when I took that Bitcoin position. Now today I will be looking for positions. I'm assuming that we're probably going to see a lot of things change today. We'll probably be looking for, if the market's going to treat the news as bad, then we're going to be looking for bearish opportunities. But we got to wait for that resistance to hold. SEC trying to shut down centralized lending platforms now. 2022 will be a year of DeFi again. Mark my words. Prepare your stable coins now for peeps in the USA. Might be. Oh, I just seen, there it is. Nothing going in the world is good news because it's all fake news. Congrats. That's exactly. Fake news. Anyone that follows you cannot be misled in trading. I've decided to stay here until I perfect my trading. Nice. I can help you. Obviously, I'm not going to be able to make you a profitable trader, but just by learning the levels that I'm watching, that will help your technical analysis. Absolutely. It will help you to find better trades, higher probable trades. Those daily opens and daily closes are going to be fantastic places to look for entries in almost every scenario. So just won't take long. Everything is very consistent. Yeah, old rope. Sorry to hear about that, says Shane. Yeah, it's terrible. Good morning, Heath. If you get time, can you take a look at PAXG and Link? I don't know PAXG's ticker because I don't trade it. PAXG USD, maybe? Hopefully this is the right one. I don't trade it. I know what it is. I've never even heard of 8cap. Binance US. Let's look at it on FTX. Oh, that was Kraken, wasn't it? Okay, so Kraken. Okay, so this is it right here. So what is this trade? It's something. PAXG, is it like Bitcoin gold or something? I don't trade it. I know a lot of people do, and I've heard a lot of people ask about it. I don't know anything about it. It was strong there for a minute. There's a lot of bad wicks on this asset. I mean, nasty wicks. Every time you think you might be getting a breakout, you know what I'm saying? So be very careful trading this. Yeah, it's difficult. It's sideways, right? It's sideways. This thing looks like it's trading almost like on a peg, is what it resembles to me. I mean, there's no obvious peg, but I mean, the way it's back and forth from like 2200 to 1500, it's like a peg. So you're coming into the top end of this range. Generally, when you come in to around the top end of the range, you see resistance. So look for resistance. Looks like today or yesterday. I don't know if this is trading currently or not. If it is, right now you're showing that. But it's crazy. Like, price action or technical analysis is probably less likely to work on something like this because the wicks are so vicious, right? So vicious. Like, there's your daily close, and then the next day you open, you trade higher, and then boom, right back down in your face. And then this day here, I mean, what is that? Just be very careful. If you're looking as this as like a hedge against something, then you want to look to be a buyer around 1742. Right? Down in that area. From 1680 to 1740 would potentially be good buying opportunities. It's just been sideways though. So I'm not sure what this would be a hedge for. One more. Good morning, says Dr. Rogers. I like KuCoin a lot. Binance is most popular. Yeah, me too. I like KuCoin. It's doing pretty good. The overall platform is clunky at best, but I mean, as far as executions, order executions, they're fantastic. And I've had price trade like almost right to my stop loss and turn around and not stop me out because of the spread. So I mean, it has good spreads and it has good order executions. Sometimes I don't get filled at the same price. Like if I go in, if I want to buy at 42, or let's say 420.69. If I want to buy at 420.69, I might not get all my order filled at 420.69. It'll be like 420.71, 420.70, but that doesn't always happen. It just depends, on how much liquidity is on the order book. I guess. But the executions are good. She says, here's hoping for a bullish close. It would be really awesome to see the trend reversal continue and Biddy and the rest of the link on. Yeah, it would be nice, but we're not going to hope for anything. We're going to continue to trade like we always do. We look for high probable entries, and then we take those. And sometimes they will work, sometimes they will not. Hi, Heath, could you please briefly talk about your results in trading and how long you were in the game? So I've been trading for a little over 10 years. For the first 5, I failed. That's pretty much it. It's not easy, guys. It's mostly, you could throw darts and make a profitable strategy. Most reason people can't succeed is because of emotions. They fight against themselves. They continually do things that they know they shouldn't. Once you get over that, the hurdle, you're going to have a lot better shape, right? And then you set a set of specific rules and you stick to those rules. You're looking for consistently profitable. That's the 2 words that is most synonymous with this market. You hear YouTubers say it all the time. It's consistently profitable, consistently profitable. Well, first you got to get consistent, right? That's the first thing in those 2 words. You need to get consistent first, then you can work on profitability later. So if you're the type of person that are trading head and shoulders and falling wedges and this and that and every single trading pattern known to man, stop it. Because you're never going to get consistent doing that, simply because taking an entry for a head and shoulders today and then taking an entry for a falling wedge tomorrow, those 2 entries are not consistent, and you cannot find any linkable data that will tell you if that is a profitable strategy or not. You must get consistent. Your entries, your exits have to be the same every single time. Then you can work on profitability. All right? That's what it's going to take. And it's going to be you that does it. I can show you the best levels to watch, the right way to analyze price, but it'll be up to you to ultimately make it consistently profitable. So hopefully that helps. I'm not going to show brokerage statements or nothing like that, guys, because I'm not selling you anything, right? If you want to buy a strategy, go buy Warrior Trading or somebody like that. That's what they're doing. That's their whole metric, their whole goal. My goal is just to show you the higher probable areas to take entries. That is it. Wondering if precious metal. Oh, yeah, I wanted to talk about that as well. Let's go look at gold. Yeah, they will get a bounce. XAU, USD, gold and silver will get a bounce. You can see that already occurred. We had a daily support down here that held really long time. Now you're seeing that bullish price action. And you also seen it strong with the dollar. So let's go over here to the DXY. Last few days on the dollar, since you tested this zone down in here, this is your quarterly midpoint, the 50% retracement here. If you're wondering what this fib is, it is the last quarter's midpoint and 618. You can see it was tested perfectly and you got that bullish pop. So as long as we're trading above the 50% retracement of last quarter's range, we're going to be looking for this thing to continue bullish. A pullback today is consistent with bullish price action. But you can see 1, 2, 3, 4. So like the last 5 days, price has been trending higher. Let's go back over to XAU USD. That is gold XAU USD. You can see that the last 5 days, this has been trending higher. So even what I'm trying to say is typically these things will trade opposite one another. If dollar is moving higher, gold is moving lower and vice versa. But now you're seeing gold actually get that strength. Even though dollar is trending higher, so is gold. So that means gold is stronger than the dollar. You have capital rotating into gold. People are leaving less riskier or more risky assets, and they're looking for the less risky assets. So this bullish push in gold looks like we're going to see more risk off. All right. So right now you're trading at daily resistance. You did get a close above it yesterday, and you have taken that out. If you continue and you take this out, that will be a bearish outside day reversal pattern, right? Because you took out yesterday's high and low. You haven't taken out the low yet. We're getting ahead of ourselves. Basically, what I mean is a pullback to old resistance, 1848, or down here to 1833. Those could be two potential areas to look for bullish entries. Right there and here. If you take out this swing down here, then I wouldn't be looking for bullish entries as much. You see that you are bullish on your oscillator. There's no point in pulling the 21 up because if you're bullish on your oscillator, you're bullish on that. And you are. So nice, big, strong bounce 3 days ago after it crossed back above the 21. I am looking for gold to start trending to the upside. So if you want to get in a longer term entry on gold, just watch the weekly. Just watch the weekly chart. Wait for an entry possibly all the way down to last week's open. It might not come, obviously, but that would be a good spot for bullish entries, 1809, and then this one maybe, right? So those two zones, or that whole zone. Because, I mean, it's simple. If you take that long, you can throw your stop down here. Obviously, that's a massive stop. That is not a day trade. But I am looking for gold to start trending higher. In a higher interest rate environment, gold should start trending higher. Doesn't mean it will. It's just what should happen. Also, that was weekly res. That's also why you're getting a pullback. It's not only daily res. You got weekly res coming in there as well. Look at that. Beautiful. Boom. So that's why you're seeing a pullback. Give it a couple days. Let it pull back. Let it find support. But yeah, bullish gold. PAXG just tracks gold. I guess I could see that because gold is kind of sideways also. Yeah, I can see that now. So if gold goes up, PAXG goes up. I got you. So yeah, look for support. You know what I mean? Look for support. You're gonna be waiting a couple days potentially, but I do like gold higher. I do think you're going to see a potential breakout. I mean, one could even argue that you have already. So there's obviously not a perfect trend we can get. Let's see what this looks like. Yeah, I mean, there's your breakout right there. So just taking from this swing high to that swing high gives you this. I mean, it perfectly held as resistance there. Perfectly held as resistance there. Perfectly held as a breakout there. So maybe that's a good spot to potentially look for support. And it would also come in line with the 50% retracement of your breakout candle. So a fib retracement tool from that bullish candle swing low to that bullish candle swing high. Do not take the swing high of this candle or this one. You simply want this range, this candle's range. This is your breakout candle. So in order for the breakout to be legit, you should not close below the breakout 618 retracement on a daily closing basis. So 1843, 1837 are good potential places to look for support. Also, you have an old supply zone right there. Look at that. It's the exact perfect midpoint of this candle is that supply zone. Supply zones, when price does not respect them moving higher, you did respect it here, but this day was the breakout. So now that people are stuck short on gold, expect a squeeze. Look for gold right here. This is going to be the honey hole for bullish entries on gold. Maybe it doesn't work on the first attempt, but maybe on the second day. So like bearish day, bearish day, bearish day. Might throw a spike in there, bearish day, but staying like neutral in here. That's when you want to look for bullish entries. So that's going to be the honey spot on gold. And then whatever gold does, silver is going to follow, right? XAG, USD. We'll just look at it briefly. You do have a bearish outside day on silver, and silver is not as strong as gold. Silver hasn't broken out of anything. So I would look for more bullish entries on gold than silver just because of the technicals. Just based on the technicals. Just based on the technicals, gold is much stronger than silver, but silver looks like you could be looking to target that region. What I mean by that is this could be a potential spot to start looking for bullish entries. You know, because if you've been following my channel for very long, you know where support is. Support is going to be the close of that bearish candle. You have a potential demand zone at the open of it, right? But since you have this bearish engulfing coming in hot, I wouldn't look to just buy it off of a demand test. I would wait for the full-on support test, right? Let that hold. If you do close a daily below support, then watch for the very next day to potentially be a recovery candle. If you do indeed recover, meaning that bearish candle is more than likely a trap to the downside to lure unsuspecting bears down lower, then the next day is probably going to be, so that would be like on February the 17th or something like that for a bullish breakout. That's only if the bear trap occurs. You might not even get it. You might test demand here and just see ya. Because, yeah, we're looking for continuation on gold and other things. This bearish move on this stuff right now is just, it's luring people into falling for it. Now we're back to risk on, right? Well, we're not yet. We got to see where today closes on some of these things. Yeah, Aussie yen still playing around with this resistance level. What's Bitcoin doing? I mean, we were just looked at. It's up almost 4% on the day. Small pullback. There's daily res up there. Obviously, you got to wait for the daily close to see if it's going to be a break of daily resistance or not. Silver need entry price. I don't have one. I mean, don't take these entries just because you heard me say it could be a potential place to look to get bullish. Because you're going to get stopped out a lot. Because I can't see into the future. I don't know what's going to happen with price. All I know is there are levels to watch. The next level to watch for silver will be your old resistance there. If that level fails, oh, that's gold, apologies. But you're looking for the same thing. Right? You're looking for the same thing. I support right there. That's where you want to look for potential entries. Don't just buy it there. You're going to get stopped out if you do, especially on the first test. You're coming in hot. So right now, this bearish price action on the risk on currencies like gold and silvers and, you know, DXY and all that stuff, you're coming off and you're getting a bounce in your risk markets. It could just be a fake out move. Could just be a fake out move. SPX is moving higher. Yeah, so you're continuing higher. But you are coming into resistance. Old resistance. So this might be an area to start, you know, watching to see if we refuse to go higher. But you're strong on the day. So, I mean, I think the short, if it's going to turn out to be a short, it will be tomorrow, not today. Do not try to short these things today. Please check DOT and HOT. I'll check DOT because we're coming into the end of the day or the end of the session, and you know other people want me to check things, so I'll check one of them. We'll look at DOT. DOT's moving higher. It looks just like Bitcoin does. Not all the way though. DOT's been a little bit more weaker than Bitcoin. You've been red for like several days in a row. You even took out support yesterday. So see that? That's what I'm talking about. Your bear trap. There's your support. We know it's support. It's objective support. It's not my level. It's prices. Support held. Support held. Didn't. That's an absolute close below support. And then look at this. Boom. That is a trap. That was a trap. Now you're stuck. Anybody that got short on DOT the last 3 to 4 days, well, 4 days are stuck. When price is trading over all the highs, anybody that got in this that didn't have a stop, they are stuck. They are sitting in red positions right now. They are in pain. So if price continues to move higher, then you're likely to see a bit of a squeeze, a nice big expansion to the upside on DOT. There is no bullish entry to take on DOT. The bullish entry was last night. The same time I got long on Bitcoin, that was here. That was this. And DOT had a support there as well. You could have watched that support right there. Same support as on Bitcoin. Held, boom. That's where my entry was, right there. That was the entry on DOT. Now there is no entry on DOT. You're not really trading into resistance on the daily, and you are above most every swing high on that hourly chart except for that. Oh, nope, you did get above that one too. So we'll see what happens. This is a breakdown candle right here. Boom. That's your first breakdown from over here. So it's only natural that price goes back up and tests that. Now it wants to see if it wants to hold as resistance. This is the midpoint of this breakdown candle. Pretty close. That's your last swing high. So anybody that got short from here and over has been stopped out last 4 days. So now what is price going to do? Now we have to wait and see if this area 1985 holds as resistance. If it does, you could potentially look for short side entries. If it keeps going higher, then you're going to leave it alone. Did I get help the first one? No. 10 years ago, there wasn't much trading stuff out there on YouTube and stuff like that. There might have been a few, you know what I mean? But it's not like it is today. It's not like every 18-year-old kid has a YouTube channel and is a professional trader. It's funny. But yeah, it wasn't as big as it is nowadays, right? 10 years ago, Bitcoin just got started. You know what I'm saying? Bitcoin wasn't like a big thing back then. So, yeah, no, I didn't have any help. I basically, once I found TradingView and I subscribed to it, I used its bar replay tool over and over and over again, every single day, day in, day out, looking for an edge in the market. And I could tell right away that standard technical analysis doesn't work, like the stuff that you're taught mostly. Doesn't work. Or if it does work, I couldn't get it to work. So let's say it like that. I'm not going to say it doesn't work. It didn't work for me. So I just decided to figure out a strategy, something that would work. And I noticed that, you know, candles open, high, low, and closes are the most important thing on the chart. Nothing else. You don't need any other indicators. Nothing. Price alone tells you everything that's going on. And I found that it works over time, consistently. So that's why I stick with it. Let's see here. I've been watching for a few months. I'm struggling to identify levels like you. It's just gonna take time. It's just gonna take time, my friend. You want to stick to your daily levels. They're easier, right? Each day has an open. Each day has a close. So start with that, right? Start with that. Your bullish closes are resistance levels. Your bearish closes are support levels, right? Once you identify a range, find the highest area for resistance, which would be there. So like, just use the bar replay. It's going to take a lot of work on your part, but it is legit. I mean, this is your last and highest bullish close, so that's resistance. Boom, boom, boom. So like, this could potentially be a short entry. They don't always work, but there it was. Boom. So when you traded back up into resistance, you did get one daily range expansion to the downside. And that's all I did. And that's all I do. It's that simple. It's the most simple trading strategy on the face of the planet. Here's a breakout. You took out this candle's high and low. So this is a bullish outside range candle. It's in a downtrend though, so I wouldn't like it nearly as much as if it was in an uptrend, but you probably will get bullish continuation. Just bring it over to this, the open of this bearish candle. That is your demand zone. See what happens on a test of it. If you get a test of it, there's your first test of it. Now you don't just blindly buy these levels. Remember, right? You got to wait for price to show you. So on the intraday chart, the hourly chart, you'll watch this level. And then you make a trading decision. So here we are on the hourly. We know that that's daily, right? We know it is. So we'll watch price. So it looks like it wants to trade away. If we're looking for bullish entries, we need it to get back above that level. And there it goes. All right, so now I'm looking for bullish entries because it was 1 day lower. This is what we call a bear trap. You just got to learn to have patience and focus on your daily levels. Now, a long is in order. Maybe even from this zone again. Or here. Something like that. All right. And you just set a stop loss and see what happens. Now you're long. Stop there. And boom. Stopped out. Nope. Almost. Remember, stop is below that candle. Almost stopped out. There's your range expansion. Yeah, you take profits though, right? Then you move your stop to break even. Now you did make money on the trade. Now you are risk free on the trade. As far as your immediate risk, it's gone. It's off the table. And that's how easy it is. That's all I do day in, day out. And on bar replay, I just pulled out a winning trade right out of the crack of my butt. So I mean, that's how we do it, right? Just you'll give it time. I know it's frustrating when you see something that works so good and you can't figure it out. Listen, I take losing trades too, right? I don't just make money. I do lose money on occasion. You got to pick your winners, your days that you're looking for those trades. On FX trades, here lately I've been taking maybe 2 to 3 tops. 2 to 3 trades tops in FX. Last week I didn't take many. Last week I closed the week out red. Last week was brutal, right? So this week I haven't taken a trade yet. Nothing is setting up beautifully, but we're waiting, we're looking. Just give it time and focus on your daily levels, only the daily. Don't worry so much about intraday levels until you do enough bar replay to see how price reacts around daily opens and daily closes. Don't pay no attention to the wicks. Yes, every now and then a wick will act as resistance or support, but 9 times out of 10, that wick is going to be a target. It will be a target. I am targeting daily highs and daily lows, and I'm looking to get long or short before those targets happen. So yes, sometimes they will act as support or resistance, but your real support and resistance levels are your daily opens and your daily closes. And just use that bar replay tool. It will help. It's just going to take a little bit of work on your part, my friend. You can get there. All right, guys, with that, I'm going to have to wrap it up. Let's see here. Yeah, all right. All right, guys, let's go ahead and wrap it up. It is 6:36, and I am looking for trades in the FX market. So we'll go ahead and wrap it up here. Thank you guys so much for being here. If you have any questions, always drop it down in the comment section, as I do answer every one of them that I can see. And make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.